Don't all be too upset about the gorgeous tan that this man has. He's a busy surfer and thinking a lot about the climate impact on the oceans. And I want to go so much into the work that you do in terms of impact at ICONIQ Capital. But for those in the audience who are like, I know ICONIQ Capital, I know they manage the money of some of the most important founders, remind us what the unique vantage point you have at this pretty unique moment in history.
Thanks for having me, Caroline. It's really a pleasure to be here. I would say first, ICONIQ was started with this idea of surrounding ourselves with a client base of founders and CEOs, a lot of Silicon Valley tech entrepreneurs. The idea was we would spend a lot of time listening to people that were exceptionally smart, exceptionally relevant. It probably would surprise a lot of folks that the client base of ICONIQ has expanded beyond Silicon Valley. It's as many non-tech founders and CEOs as it is tech founders. It's a lot of families and CEOs around the globe, outside of the US. And the simple premise that the more time we spent listening to folks like this, the smarter we would become on their behalf. And so we really have tried to curate this exceptional group of founders and CEOs across industry, across geography, across sectors, with a belief that collectively a group is smarter than any one individual. And then the relevancy of this group collectively would source a lot of really interesting investment opportunities for the group. And in that vein, about 10 years ago, I guess closer to 12 years, we launched our first private investing fund, ICONIQ Growth, which was focusing on enterprise software. We're now investing out of our 7th fund. And as we saw sort of this migration to the cloud, it created an interest in the railroads or the data centers to support that enterprise sort of migration to the cloud. And so we began investing in data centers. And I think today we're one of the largest landlords for some of the hyperscalers in building and investing in data centers around the world. And so having such a central role in these conversations and engagement with such interesting founders and CEOs across industry has really allowed us to see a few themes. One is, this sort of migration to the cloud I mentioned a second ago was very, very real. And that obviously led us to see the need for infrastructure. And then it also gave us insight into some of these shifts that happen every decade or so in terms of tech platforms. And when you see so much capital going into these industries, there really is an exceptional need to pick the winners. And so engaging with the network over these last 15, 20 years has really given us an understanding of tech trends. And now as we're here to talk about AI and the AI landscape.
And I'm so interested to get into the rails, the infrastructure, but also what are the winners you're now betting on. And look, just yesterday, one of the key stories we were reading about was a check that you've been writing to Assured, which is helping with insurance with the world of generative AI. You are still writing checks in what is a very discomforting moment. And when just speaking to this news flow that we've had yesterday and today, the incredible unique group that you have, I'm sure everyone's speaking with everyone else, being kind of what next? How? Where are we? Is there a level of urgency and unnerve among your families right now?
I think there's certainly in speaking, it depends on who we speak to, but I think in spending a lot of time with consumer CEOs lately, there is definitely an awareness that there's a sentiment shift. I think the consumer is beginning to start paying attention to the uncertainty in terms of where tariffs are going to take us, and so I think that's a pause that people are feeling. From our standpoint, though, we actually like this environment. Yeah. It makes you do the work, and I think if you're got the team, you've got the rigor, you've got the discipline, you've got the focus. And going back to what I said earlier, this is a moment where picking the winners is so critically important. And so I think right now in this AI journey we're in, it's been a long road. I mean, AI has been around for decades.
Does generative AI become more relevant at this moment where companies are worrying about predicting the future, making sure that they're profitable? Are they even more galvanized and to lean into this generative shift?
I think in the last year or two, the awareness around Gen AI has gotten everybody sort of to the point where they know it's critically important, but it is such a complicated and nuanced situation we're in right now that I think people are starting to really know the need. They need to pay more attention. And I think it's less about the predictive nature of it. I think that's kind of where we've just come from. And now we've gone to where these machines are able to think, they're able to reason, and pretty soon they're going to be able to act. And I think the acting piece is what gets us very close to this AGI moment where machines are all-knowing. I think what's happening in parallel, and maybe it's less talked about, everyone's so focused on LLMs and smaller language models, but our focus has actually been on the just the automation and also the application integration that's happening. This kind of is our software DNA. We're looking at businesses that are actually creating product that's going to allow business to be more efficient, to optimize, to create revenue, to enhance the customer experience.
Return on AI that everyone's waiting and wondering and seeing.
And we're seeing that already.
Yeah.
We're starting to see these businesses adopt technology that's making the customer experience so much better. It's creating revenue, and it's also allowing for product development and employee efficiency. Those things are very real, and that's unfolding in real time right now.
What I think is so interesting is just the depth of success that ICONIQ growth, but across the board, ICONIQ has already had. How are you seeing those companies that you've backed long, that have already gone public? You've seen incredible exits that have actually recently happened in this dearth of IPOs. Service Titan came out. They're having to pivot in this moment too, right?
Absolutely. So a few years ago, we were talking about how there was a time when you could invest in technology as a vertical. And our view is that it was becoming horizontal, that every company in some shape or form was becoming a tech company. And we used to have arguments with CEOs of consumer companies trying to explain to them they no longer are a widget company, they're a technology company that sells widgets. I think what's happening now is as tech has become horizontally integrated across every industry, AI is now the tech stack on top of that. And so we've invested in a number of companies, and they all now are embracing AI. One of my partners we have an AI report card that we talk about every single portfolio company with. How are we doing in sort of migrating to this AI DNA, because it's going to be embedded in every single company. We look at a company like Figma, which we invested in, and I'm sure many of you know because Adobe publicly came out and tried to acquire them. This was a business that was not an AI company in its beginning, but now Dylan, the CEO, talks publicly about how AI is raising the ceiling and lowering the floor. It's allowing developers who may not be super sophisticated to use AI to decide how they want to sort of give the guidelines of the products they want to develop. And it also allows people that are very sophisticated in programming and development to use AI to become even smarter, thus raising the ceiling. So every one of the companies in our portfolio, whether they started off as a traditional SaaS business, is now embedding AI.
I mean, just thinking of the winners that you have, the Datadogs and the others in this world. But what's so great and unique about your Vantage is that you call it the tech stack. There's also the generative AI stack, dare I call it. There's the infrastructure layer, which picks and shovels were where we were at for 23, 24. And you were there because you'd seen cloud and you'd gone into the data center perspective. But now everyone's wondering about, it's not just about LLMs, it's about the application layer. From your perspective, how are you looking at where evaluations build and where value accrues in 2025? Is it the same game plan? Is it still data centers and NVIDIA?
Well, I think so. NVIDIA, AMD, data centers, this was the picks and shovels that allowed us to get to where we are now, where predictive intelligence is now becoming generative. And I think our focus has really been on these application layer companies where there's an ability to really create enhanced customer experience, enhanced employee efficiency, and products. A company like Writer allows you to create first draft presentations through AI. It's creating enormous productivity. A company like 11 Labs, which is text to voice. Think about a streamer who produces a movie and wants to release it in 100 different companies like that. The ability to allow this real value creation in the business world and these workflows is the focus for us. We obviously are paying very close attention to the LLM race that's underway right now, and it's fascinating and amazing. It's hard for us to put capital there given where the valuations are. We tend to stick to our roots. It's a little bit of family office DNA. We hate losing money, and so we try to underwrite to businesses that have incredible tech teams, have incredible product roadmap, have customers, have something that's working, generating ARR, and we can see a really clear path to growth. And so that playbook, which worked in software, companies like Snowflake, Datadog, ServiceTitan, Adyen, Procore, we're hoping is working with AI. But also, just to be very honest, despite having spent countless hours looking at AI companies, I think we've looked at a couple thousand in the last 2 years. We've actually only written 12 checks to native AI companies.
12 out of thousands.
12 out of thousands of companies we looked at.
And what's so interesting, you think about a Snowflake has made such a pivot with its CEO Sridhar coming from almost a generative AI startup to then build and where the new future of Snowflake. I don't know if you know May Habib at Writer, but I think she might beat any of you and even you in terms of air miles. This woman is flying in between London and San Francisco basically on the week. And that's where I want to go in terms of geography here, because what are you seeing in terms of 11 Labs, Writer, where this tech talent is? Is it all about American exceptionalism, or is it everywhere because you're a global company?
Yeah, so we are a global company. We have offices in Singapore and London, the Bay Area, and New York. We have invested all over the world. Of the 12 native AI businesses we've invested in, a quarter are outside of the US.
Oh, wow.
11 Labs is an example. Our view remains extremely global still. I think we saw that software and that migration to the cloud I mentioned earlier really afforded the ability for an entrepreneur to start a company anywhere, as long as you had access to Wi-Fi. I think AI is slightly different in that the technical expertise and the team needed and the access to this infrastructure makes it somewhat more limited, but innovation's coming from all over the world. And I think the US does not have the only game in town. I think you look at DeepSeek and what happened just a few weeks ago, that's a very real deal. And I think we're going to start to see incredible innovation come more globally very fast. You
must see round corners. Were you surprised by DeepSeek? Were the people you're speaking to surprised by it?
I think everybody was surprised by DeepSeek. Really? And I think when the sort of cover came off, and it was became aware to everybody, I think there was both a surprise in how quickly they were able to catch up, but I think there was also a lot of, the key takeaway was they can make this technology for cheaper than our models.
Yeah.
And this wake-up call around efficiency versus our brute force spending.
Yes.
I think that's a big wake-up call. And the other thing, speaking with a CEO recently who's deeply involved in this area, was he felt that there was a clever cunningness to their technology, meaning like there's a lot of innovation and origination coming as well. So I think this innovation is global. It's happening all over the world, and it's just going to continue that trend.
And what's interesting is when we think about global diversification, there's also diversification of what you're building for the founders and families that you've worked with for so long. Look, 2024 was marked by basically just 7 companies making up most of the public sector gains. Are we going to see a breadth again? And how do you ensure that you've got diversification across that whole generative AI stack, or indeed not just in generative AI, but other things too?
Yeah, well, I think when you look at the two sort of channels, right, you have the large language models, and right now there's the debate between open versus closed.
Yeah.
I think that debate is going to be a very interesting one to watch. I think when you see what happened with DeepSeek and you see what's happening with Llama, the open architecture model seems to intuitively make sense and allows for more players to get into the game quickly and more efficiently. The closed model is going to be hard. You have to raise tens of billions of dollars on a go-forward basis, right? Everyone's talking about spiking the ball in the end zone and getting to AGI. There will be multiple winners in this space, but they're going to continue to evolve and try to outsmart the next player. And so the amount of capital taken bodes well for the open model.
Will that capital remain resilient? Do you think, will that capital still be there? Maybe more from the institutional strategic investors that are Amazon and Alphabet rather than private?
I think the capital is going to stay prevalent. What's interesting, though, about, say, a Llama or even ChatGPT or OpenAI is that they have these consumer products and there's revenue coming in that can also fund the growth. And I think that makes the products, more interesting and the financing more sustainable.
What about sustainability here? Because that's also the unique thing that ICONIQ offers here, is that you're thinking about helping that pool of talent, that pool of unique vantage point coming together, collaborating, helping you pick the next set of winners. But you're also thinking about these people's legacies and making sure they're diversified in terms of their portfolios, but diversified in what they want to make an impact on. How are you seeing that come into this moment of generative AI where everything seems to be up? We're thinking about different problems, about solving cancer, about healthcare, great leaps, changes in the way we're going to be able to make people healthier and wiser. Is generative AI something that you think about in your impact part of the business as well?
Yeah, for sure. So just taking one step back, about 5 years ago, ICONIQ launched ICONIQ Impact. And similar to how we thought the family office environment was siloed, inefficient, lonely, philanthropy's also struggled. There are, gazillions of dollars sitting on the sidelines. It's one of the great big problems we face. There are incredible organizations that have created solutions across myriad issues, but the capital isn't able to find them. It's easy to give to your alma mater, it's easy to give to your religious institution, but it's really hard to fund climate equity, really hard to fund economic mobility, racial justice, women's health, climate change, ocean health. So we created this collaborative philanthropic model where we raise these charitable funds based on issue areas. So for example, we launched the Ocean Health Collab a couple of years ago. We funded it with about $50 million from ICONIQ families. And we always partner with an objective independent consultant who really understands the space, in this case, ocean health. And so how is AI coming into this? Well, I'll give you one example as someone who spends a lot of time in the ocean, not as much as I would like, but as a surfer.
Got to manage some money some of the time.
Exactly. One of the organizations we funded is an organization called Coral Gardeners that is focused on really restoring reefs around the world. And what they've recently done is created Reef OS, which is using AI, embedding it in the reefs around the world, and they're testing water temperature, salinity, the number of fish. They're testing the health of the reefs. And this AI and the collection of data is working incredibly well to give them ammunition to figure out where their resources should be spent. So that's just one example of an impact story out of the Ocean Health Collab. But you can, as you said, you can see it play an important role on so many dimensions. When you have climate change and you see rising seas and you can see how these storm patterns are affecting developing countries and folks that can't afford food, let alone these fisheries that are being depleted, AI is going to play a very prevalent role in helping solve some of these problems.
Only a couple of minutes left, but I'm very pleased to say audience participation is upon us. And when you're thinking about that 50 million that you get for just one particular philanthropic endeavor coming from your families, they need to have had the money from the exits. And an audience participant asks, are we going to see more exits? Are we going to see more IPOs? Or is there so much great money and capital coming from partners such as yourself that they can delay? Look at a Databricks, one of your key ICONIQ investors. They could just keep raising money in the private market.
I think we are going to see a return to liquidity markets. I think the prediction was always sometime between 25 and 26 you would start to see these liquidity events happen. We just had Service Titan go public in December of last year. There's another number of IPOs that are slated for the next quarter. I think there was a period, 22, 23, where we had this rise in interest rates. There was a sort of a resetting, and I think we're coming out of that now. And the sense is that the next kind of quarters we'll see more liquidity events.
Will we see more coming together of sharing of generative AI ideas? I'm interested as this moment where we are upended by geopolitics, when we are trying to work out when the next value is accruing. What do you think gets us there? What do you think takes in terms of the wisdom that we need to see around corners at this moment?
Yeah, I think you are going to see greater collaboration, not just in sort of the tech evolution. You're seeing that through these open systems. I think it is important that we as a society start also collaborating and convening about thinking about these implications, both from a positive impact standpoint and how AI can drive social change in a positive way through innovation. But I also think we need to think about the secondary consequences of AI and how it's going to affect the job world, right? One of the most exciting things about AI is this notion of agents, this notion of digital employees and how we're going to be playing more of a manager role. But the implications of that down the road also have consequences. And so one of the things ICONIQ wants to do is spend a lot of time leveraging our convening ability to bring the right actors around the table to start thinking about how do we collaborate more? How do we think about impact at a greater scale using this amazing technology and this innovation that's coming out in real time, but making sure we're keeping an eye on the social implications as well.